Hey, welcome back to the Stock Estate Academy, swing trading strategies in 6 minutes or less. And for those of you who are new here, as well as my old subscribers, I welcome you and thank you for joining me today. And for those of you who do not know who I am, a quick introduction. I am the Stock Estate. Okay, I am a current swing trader. I am a teacher at heart, and I really like to teach whatever knowledge I learn, as well as not being just a teacher, but a student as well, because I like to learn, okay, from various sources, and whatever I learn on the spot, okay, I would like to share with all of you as well. So I would like all of us to be on this swing trading journey together. So, and lastly, I'm a former financial advisor, okay, who has, dabbled in the financial markets for a little bit. So, I wish to share whatever knowledge I have with you guys. And why am I doing this, right? So I'm doing this because I really want to share some knowledge, as well as, you guys can use me as a catalyst, okay, to learn otherwise a pretty dry subject to learn on your own, okay? Because I do know that, reading all the financial books, okay, reading all kinds of books, and believe me, I read quite a few of them, okay, a lot of books like, Master Swing Trader, a lot of other books that I've read, okay? If you wish to know more about those, okay, I can link you in the description below. But I read many books, and it is kind of excruciating at some times because there's just so many words and it takes so much time, to kind of internalize all these kind of knowledge. And hence, this channel and this Stock Estate Academy series is built, for you to give you some bite-sized chunks information for you to absorb, as well as having a narrator, as well as someone here, to deliver that information to you in a more layman and understandable manner for you guys. So without further ado, right, let's jump straight into a video. Drop a like, subscribe, and let's go. Okay, so today's bite-sized chunk knowledge is regarding bottoms, and we're going to talk about bottoms. And what is bottom? Okay, we're not referring to your backside, but it's more of like the bottom of a stock, whereby the stock's in a downtrend and it moves lower and lower, somewhat like maybe like this, right? Let me just draw it out. So it just kind of goes lower and lower, it kind of hits like a certain bottom. Okay, and this, before bouncing, may be higher or consolidating in this range. So this is what we call a potential bottom, right? So a bottom print is a direct result of pattern cycle physics. And the natural movement of impulses and reaction dictates that the two unique formations must develop at some point within each cycle. So in a sense, okay, this is part of the natural process of every single, stock. Okay, there will be some times where it goes to a bottom before rallying up higher, then making a lower low and going high. So bottoms are a natural cycle in every single time frame as well. So, like a lot of the stocks that I talk about, like ChargePoint, okay, a lot of the top 3 swing trade stocks video, okay, I've always talked about, whether it hits a bottom, whether that bottom it is held by a certain support level. So that is very important for us to, understand and, look at it. So, in an uptrend, right, okay, a lower high will eventually follow a higher high and mark a new top. And in a downtrend, right, the lower sequence of lower low will finally end when a price forms a higher low. Okay, so what does this mean, right? So in a downtrend, the sequence of lower lows. So what's this? This is a lower low, okay, lower low will finally end when a price forms a higher low. So what does that mean? So when it starts to go up and stop right here, okay, this is a higher low, okay, and this is characterized by, a sequence of another higher low, which may potentially say this is a bottom over here. So the second event marks the birth of the double bottom, okay, one bottom, two bottom, right? So this is the term coined by many old technical traders. They talk about the double bottom a lot of times, and you probably heard of this phrase a few times before or seen it in certain securities. So before I go into it, okay, forgive all my highlighting. Okay, this is my highlights and everything, so just forgive me for that. I'll illustrate as much as I can, so let me just continue on with the video. So first, okay, the double bottom draw their perspective from the trends that precede them. Okay, downtrends often accelerate as a series of lower lows prints on a bar chart, okay, which is what I've drawn just now, right? Low lows, you kind of print out. Okay, the trading crowd notices and develops like a gravity bias and expects the fall to continue unabated. So what does this mean, right? So the trading crowd kind of looks at these kind of like stocks, right? And they're like, oh my God, this looks bad, right? Okay, if you can look at some of the downtrending companies, like maybe some downtrending companies here and there, that you can see that has been dumping. Okay, a lot of growth companies these days, right? You can see that nobody kind of dares to step in because they expect that the gravity will kind of keep pulling it downwards until you reach a certain support level, right? So they kind of have this bias against it. So when the negative sentiment is there, you see a lot of bad reports like, hey, will this stock go to 0? Analyst reports, will this stock go to 100? Will this stock go to very low amounts? Then a lot of bearish sentiment starts coming in, right? And the market overreacts and it further sells off all the way until it reaches a reasonable level where people might think, hey, this is too cheap, right? They're going to jump in. Okay, so but that's a trading crowd, right? So let me just continue on to the next part, all right? So then suddenly the last low appears to hold. Okay, which is around here, right? Last low appears to hold around here, or it can be somewhat like this. Let me just draw another one over here. So the last low, right, might kind of hold. So it might go here, then it starts to, refuse to go back down. Okay, the last low refused to hold. Okay, so it may hold, and the crowd takes notice, and the bottom fishers, right, slowly enters new position. So the bottom fishers can be, these long-term investors of this company that has been, seeing their company or the company that they invested in just die over the last few months, and they are like, oh my god, I just need a dollar cost average in, right? So they are waiting for it to bottom out, and they see, this seems like a bottom where there's people starting to buy in, maybe institutions start to build their positions, and they're like, okay, I will actually start building my position, okay, and they'll actually dollar cost average into this kind of bottom area, supposed bottom, right? So when they add in, there's some buying pressure over there, and this area will kind of stabilize. Okay, so apparent price stability, okay, triggers more players to recognize this potential pattern and jump in, because this is a double bottom, which is a technical trader. So it's like a self-fulfilling prophecy, right? Whereby people looks at this kind of pattern and setups and thinks that, hey, this might be a potential for a good swing trade, right? They jump in. And the thing about swing traders is we do not want to be special, right? We want to be with the crowd. We want to, see what everybody sees, right? And we jump in with the crowd, and we get in with them, and we ride the wave up together with them, with the crowd, because the market price only moves up if everyone else is buying it, right? If you're only one who bought it, right, or who sees a pattern and buys it, then there's no point. There's no point, right? So that is what the astute swing trader does, okay? But we exit early and avoid, profits being taken away by the other side, which is the short sellers. Okay, so now we talk about the stock percentage growth potential peaks at the very beginning of a new uptrend. Okay, so if you look at this drawing that I saw, right? Okay, so example, it has been trending lower low for super long period of time, right? Long period of time, and around this period, right? This was a previous high. Maybe this was a previous high. Okay, if you are able to capture this swing over here, right, and this is the start of a new uptrend, right? Okay, and it goes all the way here. This is a potential profit, right? Okay, this is the reward, right? This is the reward. So if you're able to capture a new trend, okay, then this might be quite a high reward kind of setup for you. So that's why they say that the potential peaks at the very beginning of a new uptrend, right? And for this reason, okay, being right at the bottom can produce a very high profit for any trade made. Okay, but picking bottoms can be a dangerous game. Okay, it's pretty dangerous, right? Because the swing traders must kind of weigh all the evidence in their disposal, because you must look at a bit of fundamentals. If you wish you are a guy who likes to lose a bit of fundamental, look at whether this company is really trash. This company, does it even have some basic sales? For people to think that it is a fundamental stock pickers to think that, hey, this is actually decent, right? And they want to jump in. Okay, so is this some research must be done? Okay, and as well as look at historical patterns, right? Whether this company has held that resistance or support in previous history, right? Maybe in 2 years before there was a strong support level at a certain area, which this trading crowd seems to validate a lot. So this is pretty dangerous. So you must weigh all your evidence at your disposal before taking the leap, and exercise very strict risk discipline. Okay, I cannot emphasize more strongly on this, because if you do not have the risk discipline, right, to ensure a safe exit, if you're proven wrong, okay, this is a downfall of many traders, right? When they buy low and sell low, right, that's not the one we want, right? So because more often than not, there's these companies, right, they are downtrending over here. Look at this downtrend over here, right? They are downtrending for a reason, right? So if they're downtrending for a reason, that means there's probably some bad news or something that came out that, there's a strong negative bias towards it. And institutions might use that period, right, to fade the crowd. That means they went over here, institutions see, right, example, that this area, institutions see that, hey, this is a potential pattern that a lot of people see that, a reversal, right? So we short this company down. So they have a red bar candle downwards and short it all the way down here. Okay, and actually faded this movement upwards, and eats your stop loss. And further sentiment might actually even tank the stock even lower. So this is a very, very common mistake, that a lot of new beginners make, that they don't put any stop loss because they think that, there's a bottom, right? The bottom can't go lower, right? No, a low can go even lower. Okay, as long as some of the big institutions are in to short the company, and there's not enough volume from the retail traders to add in to support this new rally upwards, then it could be a fake out, right? And you must be prepared for that. Take a small loss, okay, but you'll feel good when you are these small little paper cuts, right? You'll feel good because if you hit one jackpot, right, it will make up for the multiple small little paper losses that paper cuts that you have actually sustained in this area. But if you let your small loss become a big loss, then you need as many big wins, right, to make up for that, which is not the kind of thing you want to do. Okay, it's horrible for swing traders. So again, losses must be taken immediately among the violation of the prior low. So again, if the prior low, right, over here, it comes over here. Let me just erase this entire area. All right. So so example, it comes up here. Okay, it forms a lower low. Okay, if it immediately violates, right, this previous low over here, right, bang, all the way to the downside, right? Okay, you should have a stop loss over here, and you should take your profits or your losses immediately. Get out. All right, that's what it meant. So double bottoms, okay, generate excellent swing trades if the price first thrusts towards the last relative high center peak, and after that level becomes a base of support for the next move upwards. So what does that mean, right? When the price first thrusts towards the last relative, which is the center peak, which is this center peak over here, this center peak over here. Okay, if it thrusts upwards, okay, this could be a potential place for you to take a position. So the Adam and Eve format illustrates the center peak performance in this creation of the classic reversal. Okay, and then the stock bounces high into its center retracement before falling into a gentle rolling second bottom. Adam and Eve. Okay, so we look at this example over here. Let me just make it a little bit smaller so they can see. So this is the Adam, this is the Eve. Okay, this is the basic classical formation that I've shown you just now. Okay, it went all the way down. Okay, takes this supposed bottom. Okay, lower low, lower low, lower low. Then the next low became higher than the previous low, right? So this is very important because this is a creation of the classic reversal, right? A very short and first bottom initiates this pattern, then the stock bounces high into a center retracement, which is here, center retracement, before falling into a gentle rolling second bottom, gentler. Okay, so you can see the first retracement was very deep, second one is a little bit more gentle, right? And this is an Adam and Eve formation. Then it finally constricts in a tight range and the stock breaks out strongly to the upside. So maybe the consolidation could be around here. Okay, the consolidation here is not really very strong, but I think you get this point. Okay, so this area, it kind of consolidates a little bit over here, I guess, and then it breaks up to the high upside. So again, if you want to look at this, you can look at the lower time frame, like 1 hour, to check out the price movement. So this is a pretty good standard formation that you want to look at when you want to do this kind of swing trades. Okay, many times the Eve's top prints a flat shelf that marks an excellent entry point. And what does that mean? I think it means that sometimes instead of just rallying upwards, right, sometimes it has a nice consolidation over here at the top before rallying higher. Right, it shows rejection at the lower areas, and actually this area is a pretty good area for you to take a trade, because your stop loss could be very tight right below this range, right? If you validate, then it could be stopped out. But high chance that there's crowd stepping in, right, to take advantage of this new trend reversal to break towards the outside. So when it trades in a range, okay, it's actually a very nice potential setup for you to take a range, because again, it's all about risk management, right? You want to take a setup, not any kind of setup, right? Because if you want to take a random setup, right, maybe you want to take it around, you don't want to take it in some random area, like here, okay, like here, okay. You want to find a nice consolidation so that you are able to set a reasonable area for you to set a stop loss as well as your profit taking area. So now, right, okay, so the relationship between this center pivot and the current price marks an important focal point as the swing trader kind of closely watches the development of the suspected pattern. Okay, so at this area, right, where it's consolidating, I bet you a lot of people will be looking at this chart itself and be like, okay, many eyes, especially the volume trades more than 300,000, right? A lot of people will be actually looking at this a lot, okay, a lot more than you think, right? Even those companies that seems a little bit more less popular, like the Teslas, the Apple, but many companies, more of them have more than 100,000 volume. That means 100,000 people, right, are actually looking at this company as selling, buying, selling volume throughout the day. So they're actually looking at this, and many people are actually really looking at this, setting their stop loss, setting their profit taking areas. So this becomes a focal point, because when it breaks to the upside or downside, it's a massive move downwards or upside because of the stops. So the people who are trying to short this company, they'll be putting stops up here. So when it rallies up higher, you can see from this range over here, it just bam, 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 all the way up. I'm betting you that a lot of stops has been triggered around this area. Okay, and you see this, some of the areas around here where there's red bar candles down, is probably some of the traders taking their profits. But again, many stops and many bullish momentum moving this upwards all the way up. And this is actually a legato system, so back in the olden days, right? So this is where you can actually place your emphasis on and set a stop loss and take a potential trade. So manage your risk defensively, right? So because bottoms occur in downtrends, and I said don't fight against the trend, right? I say in many of my videos, do not fight against the trend, because if you fight against the trend, then the trend is not your friend in this case, and you're taking a counter trend trade. So if you're taking counter trend trade, the sentiment of the entire company itself is against you. So you got to be very, very careful and very, very quick in taking profits, right? So the greedy eye wants to believe that the immature information, right? So what does this mean, right? So you're all very greedy, right? Be like, oh my god, it definitely will go upwards. Or if you hear any swing traders say this kind of words, right? Or some of your friends tell you like, I believe that this will definitely happen. Okay. Or maybe like, for example, Tesla will go up to this price. This one will go up to this price. Then judging from that, you know that he's a very novice swing trader, or he's someone who doesn't really trade, or he's someone who a little bit new to this game. Because those who are more advanced, you know that there's no certainty in the markets. There's no such thing as it will happen, right? So the greedy eye, the people who cannot control their greed and their emotions, right, will think that hey, it is. I definitely will happen. I want to believe that it will happen, and it will happen, right? And I'm willing it in my mind that it will happen, right? And it's just like many things in life, right? Sometimes I think swing trading, just a quick step away, I think swing trading is a very, very nice little thing to have, or a thing to, that relates to real life quite a little bit, because in life as well, nothing's really certain, right? Like you think that, you have a very good paying job, you have a strong paying job, and suddenly like the pandemic came, and, and it wiped out millions of jobs, and some people are just left jobless for that. People will think that their jobs are actually will be there forever, right? Just wiped out just like that. So again, nothing's for certain, and you must always have a backup plan, or you must be able to adapt, and must not be greedy, or you must not be complacent, right? So just a quick life lesson over there. Okay, if you want to hear, if you like it, I don't know, comment sections below, give a like. All right, so back to the story, right? So the greedy eye wants to believe that the immature information, right, and the fast execution fingers may bypass the better judgment. That means like sometimes we have our plans, everything ready, but our fast fingers, right, our itchy hands, right, just wants to get in when we see the price rallying higher, even though we know that the risk reward is bad, right? We want to just enter, and that's why we take massive losses. Okay, spectacular reversals offer little profit if the price can't ascend back from the hole that it came up from. And that means if the reversal, right, doesn't reverse all the way back up, if the profit target is not as much as we like, right, then there's no point as well. There's no point. Violation of the prior low is a natural first choice for a stop loss, right? Make sure that the entry permits a safe exit for acceptable loss at this location, and don't stick around too long if the uptrend fails to begins to fail. Price will also gather downside momentum quickly at broken lows as it searches for new support. Successive bottom also requires a very strong stomach. Okay, so successful bottoms are you require some volatility right there, right? Because high sentiment will affect these volatile turning points as the support, resistance, and all the technicals line up. Okay, but a lot of people will be saying, hey, this company is going to shit. This company is bad. This company is going lower. It's going to $7. It's going to $5. Okay, like you hear all these kind of things, especially on those kind of like stock tweets or social media sites about those horrible. Okay, I would say those are very horrible. So much negative sentiment, and it really clouds your judgment. Okay, when you take their views into account. Okay, as swing traders, don't care about what other people think. Okay, do your own thing. You're your own man. You're your own woman. All right, you are your own person. Okay, you make your own decisions. You make your own decisions based on your own judgment. Okay, don't care about what other people think. Right, as long as you're a consistent, profitable swing trader, you are correct. Okay, so now, okay, yes, the potential profit for this classical setup, okay, prevents a very high risk to reward, okay, as I said before. Okay, longs ready to speculate on a good upside move. Short interest will also fuel explosive impulses off these levels, because most of the time there's a lot of short interest, shorting these kind of companies to the downside. Okay, they don't care. They just want to short it until it's dead, right? And you have seen before, GME, this kind of massive short squeeze will help you to squeeze it up to the upside. Okay, so, maybe because of this reason, right, swing traders must explore the secrets of the double bottom execution. And in these kind of market conditions, right, where a lot of the growth stocks you can see, right, are hitting a certain bottom, right, this strategy might be actually a good strategy for a lot of you to trade. So keep that in mind, and as well as I want you to learn all these different kind of strategies so they can adapt to different kind of markets. Okay, but and the next point I want to talk about is you need to realize that it will take some time for a profit to grow. Okay, because again, it's fighting against the trend. Sometimes it takes some time for the momentum to build. Okay, and better yet, use round the bottom to identify bear markets that wash out and gear up for a new bull leg. Right, and this formation supports a very stable price to move upward once the pattern completes. So again, this is a very defensive kind of trade that you want to do it, and is one of I classify as under a defensive swing trade, which I've shown many times on my infographics. And yeah, so that's why I think that this double bottom have a great potential for the upside if you are able to trade it correctly. So I hope you enjoyed today's video. Okay, drop a like, drop a subscribe. Okay, if you like this kind of educational content, and I shall see you again in the next video. Stock stayed out.